Today, I'm going to teach you how car financing works in the USA. I'm a former auto finance manager, and I have over 20 years of experience in the auto industry. So sit back, relax, and let me explain how car financing works. The first thing that you need to understand is how much car you can afford. I always tell my customers to spend no more than 15% of their net income on their total car payment. This includes your loan payment, your insurance, any maintenance or repairs that you might have. So take your monthly net income, multiply it by 15, and that's how much you should be spending on a total car payment. The next thing is to look at your credit report. Your credit report is a big factor when you're rebuying a car because it's going to determine what your interest rate is going to be. If you have good credit, you're going to get a great interest rate. And if you have bad credit, well, you're going to get a bad interest rate. So make sure that you check your credit report before you go to the dealership. You can get your credit report for free at annualcreditreport.com. Once you know how much car you can afford and you know where you stand with your credit. The next thing is to go to the dealership and pick out your car. Now keep in mind, I always tell my customers to buy a car that's 2 to 3 years older than they can afford. For example, if you can afford a 2022, go for a 2019. That way, you can save some money on the purchase price of the vehicle. Also, I tell them to buy the least expensive vehicle that they can that meets their needs. For example, if you have a family of 5, you probably need an SUV. But if you only have 2 or 3 people in your family, I would suggest buying a sedan. You'll save a lot of money on gas. Once you pick out your car, the next step is to go over your trade equity. If you have a car that you want to trade in, the dealer is going to give you a value on that car. Make sure that you don't accept the first offer that they give you. You should be able to get at least 10 to 15% more than the first offer. Next, we're going to talk about the purchase price. The purchase price is the price that you agree on for the vehicle. And then we're going to add in any additional products or services that you might have. That could include things like paint protection, fabric protection, undercoating, things like that. Once you add all that stuff in, it gets to the total amount that you owe. Now we're going to talk about your down payment. Your down payment is the amount of money that you put down on the vehicle. I always suggest to my customers to bring at least 20% to put down on the vehicle. That way, you can keep your monthly payment low and you can keep your interest rate low. Once you have all that information, the finance manager is going to plug it into a computer and it's going to spit out a bunch of numbers. You're going to see things like your monthly payment, your loan term, your interest rate, your loan type. All of these factors are important, but the most important thing is your monthly payment. Is that affordable for you? So there you have it. That's how car financing works in the USA. Hopefully this video was helpful. If it was, please hit the like button. If you have any questions, leave them in the comments section below. I do read all the comments. And also subscribe so you can get more tips and more videos just like this one. Thank you for watching. Have a great day.